Hello guys, in today's video I'll be freestyle trading using True SMC on one time frame to prove that top-down analysis is not a must. And so without further ado, then let's dive in. Alright, so onto this chart on the left here, we can clearly see that price has taken out this major inducement exactly right there. Of course, making this here a swing point low. And after that, price reversed and made a break past that swing point low. And we know once that happens, that's of course a bearish break of structure. Again, we can clearly see the pattern continues. Price takes out the major inducement exactly right there. And if I am to mark the POIs here, we can clearly see that this one here is the extreme order flow, of which it's already mitigated. You can clearly see that. So this makes it invalid. And we can clearly see the one that comes after it. It's this one here, of which it's not mitigated, but in this case it's weak because it was created after the break of structure. So this is what we call a weak order flow. And you can clearly see price gave a reaction from it, but then later that reaction didn't make it to the external liquidity, and price failed that order flow all the way towards this engineering liquidity exactly right there. And after taking out the engineering liquidity, we can clearly see price made that ultimate reversal all the way towards this external liquidity exactly right there. So the reason is why I marked this as the engineering liquidity. We can clearly see that this here is the extreme order block, and of course that's the buy side liquidity right before that extreme bearish order block, and so that makes the engineering liquidity. And you can clearly see exactly right here price swept that engineering liquidity. Exactly right there, price swept the engineering liquidity and gave that ultimate reversal. So if I was to take the entry from this area, we can clearly see this bearish engulfing pattern here. So let me get rid of this. So we can clearly see that bearish engulfing followed by this bearish candle here. So this would have been enough confirmation to take the sell. Of course, your stop loss should be some few pips above that. And of course, you'll be targeting the external low exactly right there. And you can clearly see that this one here would have ended up being a winner exactly right there with 2.9 RR. So that's of course would be a break of structure right there. And that means we are currently in a new trading range. So exactly right there, we can clearly see, if I am to mark the swing points here, you can clearly see that that's the high. And of course, the swing point or the lower low that price broke is that one. And of course, the current lower low is this one here. And you can clearly see again after the break of structure, price reversed back and took out that minor inducement exactly right there. So price has taken out the minor inducement and also mitigated that extreme order block exactly right there. So you can clearly see price also mitigated that extreme order block exactly right there. That is extreme bearish order block, and that's where price made the reversal. All right, so let me mark this one here. And by the way, if you're finding it difficult to identify these order blocks, make sure you watch the previous parts whereby you'll get to learn more about this. Okay, so the reason as to why I chose this one here as the extreme order block, we can clearly see that this one here was the extreme and price mitigated that. So the next one, it's this one here, and we can clearly see price mitigated that. And here I would have picked this bullish order block, but it was not associated with a fair value gap, and so I had to shift all the way to the candle that is associated with the fair value gap, and here it is, the extreme order block. Okay, so let me get rid of these ones because we have just identified the extreme order block. And of course, upon seeing that big momentum candle unto our favor, of course we'll be taking that entry, stop loss above that high, and of course we'll be targeting this low, but that will give you a bad RR. And so if I was to take that entry, I would extend this one here for a 1:2 exactly right there, and you can clearly see price made it there. Okay, so now we are now on the current dealing range, and yeah, all right, so exactly right here we can clearly see that this one here is our break of structure. Okay, so that's the boss, and of course the high or our trading range high is none other than that one there. Okay, so what's next? Marking the inducement, and I can clearly see that this one here is the minor inducement, or that's the inducement, and in that case minor because it occurred before the break of structure. If I am to continue running price, we can clearly see price. All right, so price is heading higher, probably. Okay, so let's see. Price is consolidating there. Okay, so let me make this fast. Okay, so exactly right there, we can clearly see price made. All right. Yeah, so exactly right here, you can clearly see price created another valid pullback, again, another one below here. So that is now our major inducement. So this one is our major inducement. Okay, so let me continue running price. Because we know that before the inducement is taken out, there is no need to tie ourselves marking the POIs. So exactly right there, we can clearly see price has taken out the major inducement now. And now this is the time whereby we'll be marking the POIs. So I'll be starting to mark the order flows, and I can clearly see that this one here is the extreme, of which it's already mitigated there. So what does this mean? This means that this becomes an invalid order flow. And the one that follows, it's this one here, and it's not mitigated. So this makes the extreme order flow. So exactly right there, it's the extreme order flow. And of course, at the same time, it is the order flow that caused the break of structure. So anyway, but the correct word is the extreme because it is the farthest unmitigated order flow at the origin of the dealing range. All right, so right here, any other POI after the break of structure is weak. You can clearly see this order block here. This order block is weak. So exactly right there, that order block is weak. Yeah. And of course, you can clearly see this order block above the extreme. So this is what we call the origin order block. So let me just do this origin order block. And this here is what we call a weak order block. So this is what we call a weak order block because it was created after the break of structure. Okay, so let me continue running price. And I can clearly see price is heading higher, exactly right there. Price, you can clearly see there was no even a spike reaction from here, and price came for this. Okay, so price has yet mitigated the extreme order flow, but we can confirm our swing point low exactly right here. So that's our swing point low, meaning price now mitigates a valid zone here, probably this extreme order flow or this origin order block, and makes the reversal. Then that will be, of course, a good trade or a good entry. Okay, so let me continue running price, and we can clearly see price is reversing back. By the way, we can clearly see that this one here is the engineering liquidity. We didn't mark the engineering liquidity, and it's very important to mark the engineering liquidity. And you can clearly see after price has taken out the engineering liquidity, you can clearly see price has yet mitigated the extreme, but it has taken out the engineering liquidity. So this would have been, of course, a good entry, of course, exactly right there. And that would have been your entry, or maybe you can be conservative and place your stop loss above that high. And of course, you'll be targeting this external low or extend it for 1:2, exactly right there. Yep. So let's see the fate of this trade, and you can clearly see exactly right there, price made it to the, yeah. So this one here makes the break of structure. Okay, and by the way, since price has made a break of structure, these POIs, you can clearly see they're unmitigated, they're no longer valid, they're just reaction zones. If price makes it to them again after a change of character later, these POIs will not be valid to make a reversal towards the external liquidity, but rather just reaction zones. Okay, so exactly right there, we can clearly see that price has created a break of structure, and we can clearly see that this one here is our swing point high. So yeah, you can clearly see that the swing point high, and if I am to mark the inducement, I can clearly see that this one here is our minor inducement. So that's our minor inducement. Let me mark it. Okay, so let me continue running price and see what price does here. Okay, price created another valid pullback here. So this pullback high, the liquidity resting above that is what we call the major inducement because it was created after the break of structure. Okay, so let me continue running price. And right, so exactly right there, price created another one. So we shift to the recent. Okay, so let me continue running price. and you can clearly see price is now heading higher. Price has taken out the major inducement, and now is the moment where we mark our POIs. Okay, so if I start with the order flows, we can clearly see all the order flows are mitigated here, because this here is the order flow, and you can clearly see the ones that come after that, they're all mitigated. So in this case, we're just left with the order blocks. I can clearly see this order block, but as I said, guys, any order block that is created after a break of structure is what we call a weak order block. And you can clearly see price didn't even make a reaction from that order block. So this means that our valid order block is none other than this one here, the one on the extreme, of course. So exactly right there, that's the order block that I'm looking forward for. And this is what we call the extreme bearish order block. And we can clearly see that the buy side liquidity right before the extreme order block is none other than that one there. And it's very important to mark that. Okay, so now price has taken out that. So if I see a reaction here, I mean a bearish reaction from there, then that will be a good entry. Okay, so that is, so you can clearly see that bearish candle after price has taken out that engineering liquidity. So I will take that, of course, my stop loss there, and of course I'll be targeting this external low, and that will give me a 2.7. So that's a favorable RR. We can clearly see that that's our external low. And by the way, know that the engineering liquidity sweep can fail, and if it fails, then we'll be looking forward for the extreme or B, of which it is the most probability zone to take a trade from. Okay, so let me continue running price, and let me make this fast. Okay, so you can clearly see there the engineering liquidity failed, so we got stopped out, and that's fine. Okay, so it's exactly right there, and we can clearly see there was no reaction from the extreme order block, exactly right there. Instead, price headed higher towards making a break of structure. So exactly right there, and this is what we call now a change of character. So this means price has shifted bias from being bearish to now bullish. The reason is to why I marked that as a change of character, even though it was a break by a week, it's because this trading range involved a major inducement. So this means that a break past the external high will be, of course, a change of character. It doesn't matter whether by a body closure or by a week. Okay, so right here we can clearly see that price has mitigated that order flow from the previous dealing range, and I said that once price has mitigated these POIs that were valid on the previous dealing range that price didn't mitigated, now there will be nothing but just reaction zones. They will not be valid to push price all the way towards this external low. Okay, so you can clearly see after price has mitigated that order flow that was valid on the previous dealing range, exactly right here. You can clearly see that this here was the order flow, and price didn't mitigate it here. You can clearly see the reversal was after the takeout of the engineering liquidity. Now price has mitigated that, but price has already created a change of character. So this here, we cannot sell from that there, even though you can clearly see that good evening star pattern there. We cannot sell. You should not sell from here. Stop loss there, and of course target this one here, because price has shifted bias to bullish, and we know that we trade by the trend. Okay, so right now I will just be calling this one here a reaction zone. Yeah, so price has mitigated that reaction zone there, and if I am to continue running price, we can clearly see, okay, by the way, this one here is our minor inducement, of course, after the change of character. So we can clearly see that yeah, this one here is our minor inducement. So yep, that one. So let me mark it, and I can clearly see this candle. So let's see what price does here, if that will be a sweep of the minor inducement or what price. Okay, so it happened that price is continuing lower. Okay, so price is heading higher. All right, here, so you can clearly see, okay, so right there, this is what we call a minor inducement sweep. You can clearly see after price has taken out that, you can clearly see this low is still protected and price is reversing back. So probably the entry would have been after seeing this bullish candle there, stop loss below there, and of course you'll be targeting this high. But in this case, the risk to reward is not favorable, and of course in this case I would skip. Okay, and we can clearly see that this one here is our external high. So a break past that will make a bullish break of structure. Okay, so let me mark our swing point high. So that's our swing point high, and in this case, it's a bull swing point. Okay, so let me continue running price. Let's make it fast. Okay, you can clearly see price is reversing back, and we can clearly see that the minor inducement sweep failed exactly right there. So this means that we can now mark our POIs, and I can clearly see that this one here is our order flow exactly right there. I mean the extreme order flow, and price has mitigated that extreme order flow, so that's the valid order flow. And I can also see this order block at the very end exactly right there. So that's what we call an extreme bullish order block. And of course, after seeing that pin bar exactly right there, we'll take that entry stop loss, of course, below here, and of course we're targeting that external high exactly right there. And let's see what price does. You can clearly see price made it to the can clearly see that price made it to the external liquidity after mitigating that extreme order flow. So that's what we call a bullish break of structure. And now we are currently in a new trading range. Of course, this one here is what we call our swing point low. I mean that one there. And this one here is what we call the external low. Okay, so now price has already taken out the major inducement exactly right there. So price has already taken out the major inducement. So now let's mark the POIs. I can clearly see that this one here is the order flow. I mean, all of this is the extreme order flow. But even if I see a reaction from there, I won't buy because price has yet even make it to the 50% of the dealing range. And also that risk to reward won't be favorable. So I'll just be waiting for a reaction from this, I mean this bullish order block below here. So the extreme bullish order block below here. So this one here also, it was a bullish extreme order block. But now since price has made a break of structure, this is no longer valid. It's just a reaction zone if price makes that change of character, of course, here. And you can clearly see that this reaction, similar here, is from this origin order block here. You can clearly see that was our origin order block here. And like I said, this origin order block is not valid anymore, but just a reaction zone. It will cause a reaction probably towards this extreme order block, and then after that price will continue towards its prevailing trend, that is uptrend. But anyway, sometimes price can mitigate that and of course make a change of character, but that shouldn't convince you that that is correct or you can do it next time. No, just know that those are just reaction zones. Once price has created a new trading range, the POIs that we are not mitigated on the previous dealing range, they are just reaction zones but not valid anymore. Okay, so if I am to run price here, we can clearly see that price is heading lower and eventually price has mitigated that, I mean our extreme exactly right there, gave a little bit of reaction, not enough to buy, but can clearly see eventually price made a change of character exactly right there. So in this situation, you can clearly see price mitigated the origin order block and made that reaction all the way towards this. And you can clearly see also this order block, price has not even made a reaction from it. But anyway, this should not sway you, or this should not convince you that next time you can actually sell from there and target that external low below here. In that case, you will be trading against the trend. Anyway, price has made a change of character exactly right there. So let me continue running price. So let me continue running price here. And I can clearly see that price is creating, okay, so that is not a valid pullback because price has yet broken past the low. So let me continue running price. And we can clearly see exactly right there now price has created that valid pullback. And I can see the recent one there. So that is what we call the major inducement. Okay, so if I am to continue running price, you can clearly see that price has taken out the major inducement. So this is the time to mark the POIs. Okay, so this one here is our swing point low and of course our swing point high. Okay, so swing point low, so meaning bear swing point. So this one is what we call a bear swing point. And of course, this one here is our high. Okay, so right now let me mark the POIs, and I can clearly see that this one here is our extreme order flow. So that is our valid order flow, of course, and I can also see this other order flow here, and of course this is what we call the bearish order flow. And exactly right there you can clearly see price has mitigated that. And also I can clearly see that this one here is what we call the decision order block, of course. So right there, so that's what we call the decisional order block, decisional bearish order block. This one here is what we call the engineering liquidity. Yeah, so we can clearly see there the engineering liquidity. Yep, and price has mitigated the decisional order flow. So if we see a good reaction from there, we can actually take the entry. Okay, so let me continue running price. Okay, let me make it slow. And exactly right there, you can clearly see price is okay. Yeah, and upon seeing that bearish reaction, okay, price headed higher. But upon seeing that bearish reaction, of course, you would have sell, of course, exactly right there. And stop loss, you can set it above the decisional order block, or even better above the decisional order flow there. But you can clearly see price there has mitigated the decisional order block. So let's see if we get a reaction there. I'm anticipating one, and exactly right there you can clearly see that reaction. So there, and of course now I can place the stop loss above there, and of course I'll be targeting the external low, or the external liquidity, that is. And we can clearly see exactly right there that price is heading into our favor. So let me make it fast. Okay, so faster than that. Okay, so price has taken out this, can clearly see price has taken out this high exactly right there. So that's the recent one. You can clearly see price has taken that high exactly right there. And of course, additional buy side liquidity above here. You can clearly see all of these are just buy side liquidity. So price has taken all of that. And let's see if price will make okay, so price is heading lower, and you can clearly see price has yet, you can clearly see our stop loss is yet hit. So this means that price has created a break of structure inside our major structure. So we can clearly see exactly right there. So I mean exactly right there, you can clearly see that's our break of structure. And of course we have our high there. This one here is what we call the major inducement. So that's our major inducement exactly right there. And if I'm to continue running price, you can clearly see price has taken out that major inducement and mitigated that extreme order block exactly right there. You can clearly see that that's our extreme order block. And after price has mitigated that extreme order block, you can clearly see that reaction to the downside. So that's what we call the extreme. So, and you can clearly see if I am to take that entry, of course, I would have taken it from this area, stop loss above that high. And of course, I'll be targeting the external low. Yeah. And if I am to continue running price, you can clearly see that price is heading into our favor. Okay, so exactly right there, you can clearly see if it was a sell limit order, it would have still been triggered. And eventually, I am anticipating that price will be making, will make it to exactly right there. You can clearly see price made it to the external low. So yeah, this happens that price creates a structure like this inside our major structure, and if that happens, of course, you can actually capitalize on it also. So you can clearly see exactly right there, that's our final break of structure, or our ultimate break of structure. And after price has made that break of structure, all of this is now unnecessary. You see what you've marked here? All of that is now unnecessary, so get rid of them. Of course, also get rid of this, and you have now acquired a full structure with this one here being the high. So this means that you'll be starting the analysis from that high all the way to that low. And if I am to mark the major inducement here, minor inducement, you can clearly see that that's our minor inducement exactly right there. So that's our minor inducement, and price has yet taken out the minor inducement there. So let me do this, and exactly right there you can clearly see that reaction. So right there we can clearly see that reaction. that price has made after sweeping or after taking out that minor inducement. So this is of course a valid entry module, so stop loss above that high, and of course targeting this low. We can clearly see also that this, if I am to take the fib, measure from that low all the way to, measure from that high all the way to this low, we can clearly see that this made it to the 50%. So confident enough to take that entry. And of course, if I am to mark the order blocks here, you can clearly see that okay, so there's this order block that it was already mitigated, so meaning invalid. This order flow, this order block here mitigated, so yeah, by this long wick there, and so that becomes our order block exactly right there. So this means that I can get rid of these ones, so I can get rid of that one. And since this one is an extreme order block, let me mark it, of course, extreme bearish order block, and that is of course the only valid order block that is available on the dealing range. Of course, I didn't mark the order blocks. You cannot expect such a dealing range to have a valid order flow. You can clearly see how consolidating it was. Anyway, let me continue running price. Let me make it fast here, and if I'm to continue running price, you can clearly see price is heading onto our favor. And okay, that's not good, but you can clearly see eventually price made it to the break of structure exactly right there. So this means that we have just created a new dealing range exactly right there. So break of structure, and let me get rid of this. And like I said, once price has created another break of structure, this POI is no longer valid, and yeah, it is just a reaction zone. If price now makes a change of character and comes to mitigate that, it will just be a reaction zone. Okay, so exactly right there, we can clearly see that we are in a new trading range. This one here is our major inducement. Of course, that one, this one here is what we call the decision order block, and the extreme order block is none other than, okay, so that is mitigated. You can clearly see exactly right there, it's mitigated. So the extreme order block will be this one here. And of course, this one here will be a weak order block. Exactly right there. So this one here is mitigated, so I'll be using this color. This one here is our extreme, so extreme bearish order block. This one here is a weak order block, so that's a weak order block. This one here is what we call the decisional bearish order block. And of course, our engineering liquidity is none other than this one here. So that's our engineering liquidity. Exactly right there. And by the way, on the previous dealing range, the engineering liquidity was this one here. I forgot to mark that, but it is very important to mark it. So exactly right there, that was the engineering liquidity, but now it's of no use because price has already made a break of structure and we are currently in a new trading range. Okay, so let me continue running price here. And we can clearly see price has taken out the minor inducement, major inducement. And in this case, I am not interested for the sell. The reason is true, I'm not interested for the sell. Reason number one, we can clearly see that if I am to take that, of course, I'll place my stop loss here. I will not place my stop loss above that high. So I'll place the stop loss above there. And of course, okay, so you can clearly see this is also a mitigation of the decisional. Exactly right there. You can clearly see price also mitigated the decisional. So even after that, I will still not take this entry. Direct entry, that is, not unless it is a lower time frame execution, but a direct entry here, it will give you a small risk to reward. As you can clearly see, your target is this low, and you can clearly see that's a 1.34. So that's not favorable. So maybe extend it for 1:2. And maybe extend it for 1:2, but at the same time, you can clearly see if I measure this range here, you can clearly see price has yet made it to the 0.5%. So this means we are selling in discount, and that is not recommended. It will eventually lower your risk to reward if you don't consider the sell in premium and buy in discount. It's actually a very important rule. But anyway, this here is a valid entry, so I'll just be doing that, but that's not actually okay. And you can clearly see price has yet even made it to that low, but okay, let's see. Okay, price made it to that. You can clearly see exactly right there. Price made it to that low. But we know that this one here will not be a valid break of structure. The reason is to why this one here is not a valid break of structure is because we can clearly see that this dealing range has yet made it to the 50% of our previous dealing range. And this means that that retracement is not deep enough to confirm this one as a valid break of structure. So what does this mean? This means that now, okay, so in this case, the decision is already mitigated, and now this, okay, so this one here shifts to this one. So this major inducement shifts to that, of which now it's no longer that one, but this one here, because price created another low below there. And so that becomes our major inducement. So now I'll continue running price here, and exactly right there, we can clearly see price has, okay, so exactly there, you can clearly see that reaction. Again, you can clearly see that if you take that entry, even though it is a valid, a valid one, this here is not like, you will not be selling in premium, you will be selling in discount. So again, I said an important rule to always sell in premium and buy in discount, and you can clearly see stopped out. Even though that's a valid entry, this time around will be stopped out, and you will have a low win rate if you will be taking this kind of entries. That, I mean, if you will not be considering that rule to sell in premium and buy in discount. Okay, anyway, let me get rid of that. You can clearly see now we are left with these two POIs. Yeah, I mean, we are left with this POI and of course the engineering liquidity there. So let me continue running price. And exactly right there, we can clearly see price has mitigated the extreme exactly right there. And we can clearly see what price is doing here. So that was very fast, but if I was to take the entry, of course, after that that bearish engulfing stop loss above that high, and of course, it'll be targeting this low. And even better, we can clearly see that this one here is the extreme of B. So, of course, here it wouldn't hurt to set a sell limit order there. Of course, your stop loss above that high, or even better. Okay, you can set it there, but it will be better you set it that high. And of course, you'll be targeting that external low. And you can clearly see, of course, that will be a good risk to reward. So here, you can clearly see price has made a break of structure, of course, here. And this is what we call now a bearish break of structure, and we are now in a new trading range, of course. So let me continue running price here, and we can clearly see price has, okay, so this one here, you can clearly see that this is the extreme or B. Price has already taken out the major inducement exactly right there. So this means that a reaction from there, a good reaction from there, will be taking the sell. As we can clearly see that these ones here are our swing points. So we have that one, and we also have this one here. And of course, our lower low is none other than this one here. Price has already taken out the major inducement, and that's the area. So if I get a good reaction from there, of course, that will be a good sell. Okay, so let's see. And you can clearly see exactly right there. So that would have been a great sell, of course, upon seeing that. Of course, stop loss above that high, and you'll be targeting the external low. Okay, so that's a favorable risk to reward. You can clearly see that's a 2. Yeah, 1:2 is a good risk to reward. Okay, so let's see what price is doing here. Okay, so price consolidated a little bit, but eventually price made a change of character. So if price makes a change of character, so then this means that we have shifted bias to bullish, because you can clearly see that this one here is what we call a coach or a change of character. Okay, so now here we can clearly see this one here is the extreme of B, that it wasn't created on that dealing range and price has made it there. We can clearly see that this one here is our major inducement. So exactly right there, major inducement. And if I'm to continue running price, you can clearly see price is reversing from there. It's not a coincidence. Okay, so someone else will be taking that entry, of course, after seeing that stop loss above that high, and of course they'll be targeting this lower low. Like I said, once price has created a new trading range this here, even though it was a valid POI and price didn't mitigated it, now it's none other than a reaction zone because we have just shifted bias to bullish. You can clearly see this one here was a bearish zone, but now we are bullish. So if you sell from this zone, you'll be selling, you'll be trading against the trend, and we all know that the trend is your friend. So just know that these ones here are just reaction zones and nothing more than that. Okay, so price has taken out the major inducement, and I can clearly see this one here is our extreme order flow, exactly right there. So extreme order flow, so valid order flow. Of course, the engineering liquidity is none other than this one here. So that is our engineering liquidity. And of course, I don't see any decisional here. So the extreme, it's none other than this one here. So that's our extreme order block. Yep. And yeah, I think the dealing range is now fully marked. Of course, we have our swing point high at this area. Exactly right there. That's what we call a bull swing point. Okay, so now let me continue running price here and see where price reverses from. Okay, so price took out this major inducement, and you can clearly see it's giving that reaction. Like I said, buy in discount and sell in premium. If I am to take this here and drag it all the way to that high, we can clearly see we are yet in discount, so why buy in premium? And we all know that we want a good win rate, and this is one of the things that you need to consider, buying in discount and selling in premium. Just by following that one rule, you may find an increase in your win rate, trust me. Okay, so let me continue running price here. I will not buy from there because I don't want to buy in premium. Okay, so I'll continue running price, and you can clearly see that person was stopped out, even though sometimes it works and price may continue all the way towards the external high, but in that case, you will be lowering your win rate. Anyway, let me continue running price. You can see price is reversing from there. No valid zone there until price mitigated this extreme and took out the engineering liquidity there. So this is when now I'll be buying, of course, after seeing this good reversal pattern. Of course, buy all the way to that high. And now if I am to continue running price here, okay, so exactly right there, you can clearly see that price is heading onto our favor. It's continuing with its prevailing trend. And that's the reason as to why you should never sell from these areas. Yep, you can clearly see I have the confidence that price will eventually make it to our full TP. Price took long, but eventually you can clearly see price made it to our full TP. Exactly right there. So this is what I mean, or this is what I'm emphasizing, guys. This is just a reaction zone. Yeah, just a reaction zone. Probably cause a reaction towards the order block that aligns with the prevailing trend, of the POI that aligns with the prevailing trend, but it will not cause a shift all the way towards the change of character or all the way towards the external low. And even sometimes price may not even give a reaction from it. Price may just spike through it without even giving a reaction from it. Anyway, let me not make the video long. I know you have learned something, and as you can clearly see, top-down analysis is actually not a must. You can actually become a profitable trader just by using one time frame, and this is it. And if you have made it to this end, that's true dedication, and I will see you at the top. So do me a favor, drop a like, and I will see you in the next video.